Hello everyone and welcome to my weekly outlook with me, Richard Perry, market analyst at Hantec Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now moving into this week, we've had this slight air of dollar correction that is beginning to come through in the markets. We've had this strong dollar move since April, but it just seems as though in the last few weeks that there's been a sort of rolling over of that dollar move. Now, the strong dollar has basically been born out of the tariff moves that have come out of Donald Trump's administration, capital moving out of the emerging markets into the US. That has helped to strengthen the dollar. Now, as Donald Trump is sort of continuing to ratchet up this tariff rhetoric, it seems as though he's getting closer and closer to the end game. And when that happens, I think we could start to see that the strong dollar starts to dissipate, because what we've got is the monetary policy outlook for the US seems to be also fairly well priced in, and also the markets are going to be looking at, I think, the twin deficit scenario for the US as well coming up. So I think that it's becoming an interesting moment, I think, for the US dollar bull run. There's some key levels that we need to look out for on the dollar index, sort of lay them out in the report, and I think we need to just continue to just monitor how this moves, because you also got the fact that euro is beginning to find a little bit more support. Sterling is beginning to outperform on Brexit, so this is an interesting time, I think, for how the dollar moves. Now, dollar is obviously also a key factor in commodity markets as well. The gold price, for example, has picked up as the dollar bull run has started to dissipate a touch. So these are all impacting on other markets too. Now, in terms of this week, we've got a little real US major data out. So we're looking more towards the UK data, which is for inflation and retail sales, and also politics regarding Brexit again seems to be a key factor. Brexit is going to be an increasingly important part of how sterling moves in the coming weeks as we move towards all these European summits that supposedly we could be getting a deal out of. So it is something that we need to certainly be considering. Now also you've got to look at the Bank of Japan, which has got its monetary policy meeting this week. No real surprises expected there from the BOJ, but also the SNB as well. So, where are we looking at in terms of Forex markets? Well, as I said, euro-dollar has been picking up. It's been forming a bit of a sort of ranging play between 15 big figure, 1745. Seems to be sort of edging towards the upper reaches of that band, but it still needs to break out to really suggest that it's going to be pulling higher. At the moment, it's just a consolidation that could turn into a base, but it'll be interesting to see how, as I said, how the market reacts to the continued ratcheting up of the trade tariffs. It was interesting on Monday morning, for example, with the reports over the weekend with Donald Trump ready to go for the 200 billion tariffs. We haven't seen the dollar strengthening, which is something that is a little bit of a change to how the dollar has previously moved. Now, in terms of Brexit and sterling, I mean, you can almost pretty much lock those two in as one and the same at the moment, but sterling is continuing to sort of make marginal gains as the recovery continues to creep higher. It is leaving higher lows and higher highs, pushing out. I think inflation is going to have an impact on sterling in the coming days for the UK. Inflation is actually expected to drop back a touch, so how that impacts on sterling will be interesting. Theoretically, that would be positive for the economy, because average real earnings going up would be a positive for the economy, but it sort of restricts perhaps the interest rate expectations on the Bank of England going forward. So it'll be an interesting move to see how sterling goes on that inflation report. But the inflation data, however, the retail sales also could have a key part to play. Expected to drop slightly on the month, but how the growth of retail sales continues to sort of underwhelm a touch. Had a strong July during the World Cup, but is that just going to be a one-off, basically, is the thing for that retail sales data for UK. So how that impacts on sterling will be key through this week. Now, sterling in terms of cable pulling higher towards 31.50, 32 area will be interesting. Can it break through that initial resistance? And on the dollar yen as well, impacting the yen will be obviously the Bank of Japan this week, and how the BOJ starts to sort of factor in how the inflation is just sort of teetering around the 0.9% level is the expectation at the end of this week, and how it deals with that issue. So, indices. Well, we've had Wall Street, which remains very strong. However, you compare that to European markets, the DAX, the FTSE, which have not been so strong. However, in recent days, the last week or so, in fact, we've seen the DAX pulling higher. Now, has that given another chance to sell, or is it just part of the recovery? That is the question. I think it could be trade tariffs generated and driven the move. But the DAX could be in recovery mode if the markets can digest these trade tariff issues fairly positively. In terms of FTSE 100, it is a big drag having a sterling strength on the FTSE 100. That is generating the underperformance that we tend to associate with the negative correlation play with FTSE 100 and sterling. And that is an issue again. You've seen the recovery barely taking off on sterling. Now, in terms of where commodity prices are, what we have seen is the gold price, which again has started to generate a bit of support, starting to build potential higher lows, and that has come as the dollar has lost its traction in the recovery. Now, is this the beginnings of a dollar correction? If so, I think we're going to see the gold price rising. The other interesting thing is that gold is starting to become more of a safe haven again. Previously it hadn't been the safe haven choice, but now it's starting to be a safe haven choice once more. Further to that, we've got the gold-silver ratio, which is a chart that I quite often look at, and it is a very extended chart at the moment. 85 is the level to the gold-silver ratio. Above 80 tends to be where you start to get retracements coming in. Now, this means that gold is historically very stretched compared to silver, and we could see a retracement in that move in the coming weeks and months. So watch out for that. It looks likely that silver is going to start to outperform gold in the coming weeks and months. And finally on oil, where we are sitting with oil, there's still supply issues around, but also it's going to be now increasingly the demand issues and how the trade tariffs affect the oil price. Increasingly range bound actually on certainly on WTI, but also we have seen that aspect on Brent crude as well. So as I said, this week we're looking out for sterling, we're looking out for the UK inflation and retail sales, we're looking out for the Bank of Japan and the SNB mainly as the key factors to watch out for. So with that in mind, I wish you good luck in your trading, and I will speak to you next time. Thank you.